Hello, and thank you for clicking through. My name is Steve Kalem. I'm a senior mortgage banker with US Bank. And Denise asked me to put this video together to share with you the solution that I've come up with, and we're working really hard in the marketplace to help buyers and sellers deal with the affordability issues that have occurred since interest rates have gone up so quickly. So let me share my screen and show you what I'm talking about here. I'm having a lot of traction on this, getting a lot of good activity on this in the marketplace. So Denise shared with me that I think for my notes that your townhouse is listed at 895. And so I've got four vertical columns illustrating the sale of your home. And the first column on the left is the market rate and all the information. In a standard situation, what I'm seeing coming across my desk is 20% down. So 20% down on 895, you see the loan amount and the 30-year fixed rate today, and then the monthly payment. I'm estimating your taxes and your insurance for a buyer, and then the cash a buyer would need to close on the purchase with 20% down with standard fees in Montgomery County. I think you're in Montgomery County. So standard fees, not a first-time home buyer, a little less than $202,000. That's column one. Now, the idea is instead of negotiating on the price or reducing your price, to have preferred financing where we reduce the interest rate. And we do that by having the seller pay, in this case, $15,000 towards a buyer's closing cost and specifically towards the buyer's points on their loan. That reduces the interest rate because points are prepaid interest. And the formula I'm doing here is 2 points. So in column one, the loan amount is 716. 2 points on 716 is a little less than 15,000. I rolled it up to 15,000 to make sure there's enough in there. So the seller here, you would pay or contribute towards a buyer's points, and go down column two, you see that reduces the interest rate from 5.875 to 5.25. That lowers the payment over $281 a month, almost $300 a month, every month permanently for a buyer. So the payment now becomes $47.98, and many more people can qualify who have been maybe priced out of the market now or can't stretch. They now qualify for this because the payment is lower. There's another thing I'll point out to you in that for a benefit for a buyer. The cash to close at the end of the day, you see in column two, is actually less than the 20% down in column one. They're both 20% down. How does that work? Because even though the points are being paid by the seller contribution, points are prepaid interest, and that's tax deductible, and a buyer would get a tax deduction. So in reality, to a buyer with 20% down, doing this would be, after the tax deduction, I'm estimating a 40% tax bracket, they would pay what is that, $5,000 less out of pocket when all the dust settles, and their payment would be almost $300 less a month to do this. And that would be a $15,000 contribution by the seller, which is way less than a negotiation typically that would happen on a purchase price. To even do better than that, if the focus is on the payment, we can do the same number, 2 points, and do what's called a 2-1 buy down. That is when you put that money in a kitty. We would do that, and the interest rate, the start rate, is brought down 2% the first year and 1% the second year. So the start rate on the 30-year fixed is 5 7/8. The first year for this buyer would be 3 7/8, then 4 7/8, and then 5 7/8. If you go down column three, you see what that does. That would reduce someone's payment almost $900 a month, $868 every single month for the first year. The second year, the rate would go to 4 7/8, and that would be half the savings. So it would be lower than what the market is, but it would be $434 less a month than what the normal rate is. You're saving tons of money if you're the seller. I'm sorry, if you're the buyer. And year three, then you're going to get a 30-year fixed rate. Now, most economists believe we're in a recession, or we're going into a recession. When we go into a recession, the way the Fed fights that is that interest rates come down. Now, this might take a little longer now because of inflation. They want to bring inflation down. But once inflation starts coming down, and most early reports are that it's starting to kind of, it's peaked and start coming down. But in any case, the rates will be reduced. They have to reduce them because they're slowing the economy so much. So that's the cycle. So someone who took advantage of this would get a tremendous savings and a buffer over 2 years, and then they'd refinance into a permanent loan later on. But in a worst case scenario, the highest they could ever go is what the 30-year fixed rate is today, and that rate is going to be going up because the Fed is going to increase the federal funds rate in the next meeting in November. So that's the long way around. But again, this is $868 less a month and less money out of your pocket to buy the house. Now, the column 4 I just put down as the alternative. We can do this loan with up to 90% financing, which is 10% down. And usually you need mortgage insurance. If the buyer is strong enough and qualified, we can do it at no mortgage insurance. And so that yields out column number 4. And the rate, if the loan amount goes up to 805, the person's only putting down 10% on your 895. And their payment is actually, if you look at it, 4632. It's $447 less per month than it would be for that same buyer with 20% down in column 1. So it's a super savings. And then the next year, it would be $220 less. You're getting a situation where if you look at the cash needed to close, the buyer is getting in to buy your place for $106,000, $107,000, and they're saving $447 a month. Let me come back and stop sharing my screen. Now, this is a lot of information, and my dog wants me to take him for a walk. So I'm going to cut here, but I'm happy to do a video like this for preferred financing. Nobody else does this. The 2-1 buy down on jumbo financing is unique to us. So to US Bank. So I would be your preferred lender, and we do a video and we market the property like that. Let me know if there's any questions. Thanks for listening, and I hope you're having a great day. Take care. Bye-bye.